Well, ahead of the result season, you always have the preview season. We've been talking about how the first quarter preview for a lot of the financials have been, and before going into break, we spoke about V-Mart as well. But let's talk about V-Mart. That stock is abuzz in today's trading session after reporting what was a good set of the first quarter preview update itself. The stock at the high point of trade. Remember, the company's revenue grew at around 16%, with V-Mart same-store sales growth coming in at 12% for the first quarter as well. Anand Agarwal, who's the CFO of the company, now joins us. Thanks a lot, Anand, for joining in. Always a pleasure speaking with you. The first obvious question is that FY24, the SSSG was just about 1%. The first quarter, SSSG is 12%, so obviously it comes on a low base. What's the target for this entire year?
Thank you, Mangalam. I think we should still be targeting mid to high single digit for the full year. While the first quarter, as you rightly said, might be on a low base, but definitely with the disruptions in elections and also almost zero marriages in the first quarter did not really help us in terms of getting any tailwinds. But definitely we look forward to a much stronger year throughout.
Okay, so, it's low double digits right now that you've seen in terms of SSSG growth. And you said there were certain factors which did not work in your favor. Despite that, you're talking about high single digit growth in FY25. Are you being conservative here? Because it looks like the other quarters could be better than quarter one.
Not really, Sonal. I would still want to be cautiously optimistic. I think we've seen a lot of downturn, especially in the rural and the semi-urban space in the last 2-3 years, especially post-COVID. We've seen a lot of consumer behavior getting changed. So we've tried to adapt a bit to that. And I would still want to be cautiously optimistic and make sure that at least we get back to where we were pre-COVID levels in terms of the sales per square feet. So SSG is just one of the metrics which we track. But I think more importantly, we want to increase our throughput at the store level, which obviously should mean that we would want to grow our SSG in high single digit, at least for this year as well as the next year.
You actually anticipated the next question. Then you spoke about SSSG being at high single digits, but that not being the only metric that you track as well. So let's talk about some other metrics. If you could, share how the other internals been during the quarter: product mix, average ticket size, footfalls, any data that you can, share with us that describes consumer sentiment better.
I think we've definitely seen a bit more traction in the consumer footfalls. We've seen slightly better numbers, and also in terms of the number of bills that we cut, we've seen much higher growth there. Particular regions which were not doing so well in the last 1 year, they've started to come back, started to grow. We've also closed a few stores in the last year. We took a hard call on almost 25 stores closure last year. So that's also now behind our back. So that's also slightly helping. Overall, I think in terms of the product portfolio, we have made the product slightly younger. We're trying to reach out to much bigger audience, and especially the youth audience. We've reduced our marketing significantly. We're going more digital. So a lot of changes that we've been doing. And especially on the product side, I think we've implemented a full new design team in the last 1.5 years. We've set up a new warehouse in the last 1 year, which has now got operationalized. So internally, I think there's a lot of work which has happened in the last 1.5 years. And I would say almost 30-40% of that has now started to bear fruit. There's still a lot of projects which are underway. There's still a lot of work which is, happening. But yes, everything takes a bit of time. But we're quite hopeful that we should be able to get back to the pre-COVID levels and improve our performance even better.
Okay, take that point. So let's talk about revenues then. A 16% growth this time at 786 crore rupees in quarter one. What's the target for FY25? Now that elections are over, we do have monsoons coming up. What's the demand like in Uttar Pradesh, Bihar, Jharkhand, Uttarakhand around monsoon? And what's your take here?
So monsoons are expected to be slightly better this year. It's been a slow start so far. But what the forecast currently suggests, we should have a bountiful monsoon this year. And that should bode well for our key markets of UP, Bihar, West Bengal, Jharkhand. And given the backdrop of last 2 years, while the national average of monsoons was okay, but in the Indo-Gangetic belt, the monsoon deficit was almost like 16%. So hopefully this year it should be much better, and that should also reflect in better purchasing power for our core customers. So far, we have seen good demand coming in from all of these states, UP, Bihar, Jharkhand, and West Bengal. despite the fact that it was acute summers, no monsoons, no early onset of monsoon. But yes, we remain hopeful, and given the spate of how the rains have happened in the last 10 days or so, it definitely looks like that it is going to be a good season this year.
Good season this year. You've spoken about, all the things that are driving the top line this time around, and also a lot of the things that you've done at the back end to improve efficiencies, be it closing stores, having a new warehouse, increasing your, focus towards digital spends, etc. What happens to the margins? Because with all of this coming together, one would assume that margins would grow ahead of revenue, right? What kind of margins are you targeting this year? Because last year you fell back quite sharply.
Yeah. So I am not too optimistic on the margins. We will definitely want to improve on our performance, definitely. But at the same time, I must also highlight that we have also taken some price cuts in the last 2 years. We've also been reducing our average selling prices. So there will definitely be some pressure on the margins. But yes, with some amount of same-store sales growth or reasonable amount of same-store sales growth, there will be some amount of betterment in the margins. Being a value retailer, we would want to push back the maximum value that we can give back to the customer and thereby increase the top line and increase rupee margins rather than increasing the percentage margins. So that's always been our core focus, so that we are able to convince and make sure that our customer repeat buys always with us, and that is something that we will still want to drive. So I will not really commit or comment on too much of margin growth. Also, that the inflation has not really been very helpful. But yes, there will be some amount of margin growth versus last year.
Okay, so let's take the margin question forward and the two segments. Just want to understand, when will Unlimited's margins meet that of V-Mart? And also on LimeRoad, do we expect it to be a bit positive this year, maybe first half or second half?
So Unlimited has definitely been a turnaround story. We've been seeing good growth in Unlimited. We've also closed a lot of unprofitable stores in Unlimited, and that should start helping, looking at some better numbers coming in from the brand. In terms of how they equate to the core V-Mart business margins, I think that is still at least a year away. But the journey looks quite positive and very, very visible now. As we are opening more number of new stores in South India under Unlimited brand, we are able to get similar level of margins, especially in the new stores. So it's just a matter of time before the the average margins for the entire chain becomes almost equal to V-Mart. As far as LimeRoad is concerned, we've been stressing a lot in terms of making sure that fits in very nicely in the omnification of the entire group's offline business. That's where the key focus lies. And I think there's still a lot of work to do there. We should not be able to probably look at profitability in that business before next year. Would not really want to comment on exit the year at profitability, but yes, we will be reducing our losses on that business quarter on quarter, like we have been doing for the last 3 quarters, and going forward also we should see reduction in losses every quarter. It's a very small business. It's a very less than 2% of our business, so not really material.
All right, take that point. Just one thing, you said there would be improvement in margins even if you're not very optimistic. Last year was 7.5% versus 11% in the previous quarter. Do you have an aspiration to be around high single digits or perhaps double digits? Just trying to understand that. Your own aspiration here.
No, aspiration will always be to, be in high, at least in double digits, but really can't comment at this stage what the full year number is going to look like.
Okay, all right. Mr. Agarwal, thank you so much for joining us today and speaking with us with the outlook going forward. That's the word coming in from V-Mart Retail. They expect high single-digit SSSG growth in this fiscal itself, and some idea about the demand trends in different geographies as well. Time for a break. Pritesh Mehta of Yes Securities joins us on the show with some trading strategies on the other side. Stay tuned.